Hey everyone, this is Jay, also known as jaynemesis on eToro, where I trade as a popular investor, and this is our weekly update for week 41 of 2018. Our top news this week: the stock market has been in decline. This is primarily led by both China and the US. So in China, we've seen some of the biggest stocks over there, especially in the tech sector, hit 52-week lows. There's been a lot of pressure on the Chinese economy for some time now, but it seems to have kind of reached a peak during this past couple of weeks. Recently, the Chinese government even came out and said that there are some companies now that are of effectively national importance and are now too big to fail. So the implication being that the government may actually help bail them out if they actually got into financial difficulties. So naturally, that's kind of left a lot of investors feeling pretty uneasy about how that would affect the rest of the Chinese economy. And of course, the idea that a government is actually propping up companies is something that doesn't really sit too well with a lot of people as well. Over in the US, it's been a slightly different problem. The stock market has been doing very, very well since Trump got in power, which a lot of people were pretty surprised by, including myself. But it has also been a lot more volatile, and there's been a lot of concern about some of the protectionist measures that the US has been taking, and that a lot of the numbers that we're seeing from like the jobs reports and things like that over in the US are a little bit flaky under the surface. So the interest rate was changed as well, so by the Fed. So this is effectively led to this big collapse in prices, especially led by the tech sector as well. So the tech companies over in the US were the ones that were most majorly affected. The Nasdaq was down by almost 10% in just 1 week. So pretty sketchy times in the stock markets at the moment. This has also had a knock-on effect with the rest of the world. We've already seen the Eurozone and the UK kind of struggling due to the pressures of Brexit as well. So overall, the economy is not looking too strong, but I still think that it's not quite on the brink of full-on collapse just yet. We still have earnings period ahead of us, and I think that could help turn things around if we see some really strong earnings reports from various companies. In crypto, the Tether has dropped sharply in value. So USD Tether, most commonly known as Tether, this is basically the first stablecoin that was created, the first pegged cryptocurrency. The idea behind Tether is that there's a bunch of US dollars sitting in bank accounts somewhere that are actually backing up the crypto. So they create new Tether every time there is a big deposit made into that big account, effectively. So the idea is that you could, in theory, redeem your one Tether token for $1. Unfortunately, and we've seen this a few times in the past, the Tether price has actually kind of moved pretty far away from $1, at one point even hitting 88 cents on some exchanges. This is pretty crazy stuff. There's a lot of different rumors circulating, and as I said, we've seen this before a few times with Tether. I've had concerns over Tether for a very, very long time. When they first launched, they suggested that they would be doing financial audits and a lot of transparency things throughout the life cycle of this altcoin. And basically none of that has ever surfaced. So there really is no evidence that any of this is really backed up. We're just kind of taking people's word for it. The theory here is that every time there's selling pressure and people think that it's not worth $1, the fact that it keeps going back up to $1 means that someone is doing insider trading because they know that it actually is backed up by real dollars. So the theory goes that as long as it maintains a price of $1 or somewhere around $1, maybe 2 or 3% variance either side, then it's probably pretty stable and pretty well backed. But we have seen it fall out of that range in pretty dramatic fashion this week. So that's leading to a lot of questions. There are rumors spreading around at the moment that the banks that work directly with Tether are in some sort of financial difficulty, but really there's nothing confirmed at the moment. So I guess the big question from this is what's going to happen? We've seen that the price of traditional cryptocurrencies like Bitcoin, XRP, Stellar, all of these kind of big name cryptocurrencies have actually jumped quite substantially during this time, some by around 10%, which is noticeably about the same amount that the USD tether has dropped by. So the theory behind this is that basically people who are concerned have been moving their money out of tether and into basically any other cryptocurrency they can. The fact that arbitrage has not taken place and we haven't seen people with real US dollars go onto an exchange and then buy tether, waiting for tether to go back up to $1, suggests that there could really be something wrong here. The effect I think this is likely to have on the market, though, is that we will see effectively a small pump and dump in Bitcoin, maybe several, as this kind of carries out and goes through this process of people exchanging their tether for Bitcoin and then selling the Bitcoin for some sort of other US dollar pegged cryptocurrency or perhaps even real US dollar. So I think overall, if I were you, I would probably try and keep any money out of Tether for the moment. This does affect some exchanges more than others because some exchanges use Tether and some don't. Bitfinex is the exchange where Tether was first created and first deployed. It's also used on Binance, on Bittrex, and a whole bunch of other exchanges. So I would just be kind of cautious about storing any funds in it. I've never used Tether. I would also be pretty cautious around Bitfinex as well, because Bitfinex, as I said, is basically an exchange that has been using it for so long that it could actually be very, very embedded into the core infrastructure of that exchange effectively, and effectively potentially have some sort of a systemic crisis across that exchange. We have seen some exchanges close for withdrawals and deposits at the moment as well in USD Tether. So again, not great news, but pretty good news in the short term for the Bitcoin price at least. It does mean that we've broken out of that descending triangle that we've been in, that long-term downtrend. But I'm not sure that we can really count this as a real breakout, so I would definitely be cautious on turning bullish on Bitcoin just yet. Onto our trading stats for the week, minus 9.25% portfolio change, minus 3.72% realized profit, or loss in this case. 23 trades were closed in total, 8 of which were profitable and 15 of which were unprofitable. Most traded this week was the NASDAQ 100 and Square. So taking a look at the crypto recap for the trades closed this week, starting with EOS. 4 trades were closed in total, 3 of them were unprofitable, ranging between minus 5 and minus 21% profit, or loss I should say, and one of them was profitable for 3.2%. Although a lot of these were actually closed in the red, these trades were kind of theoretically making money because I closed them when the EOS price was in the high $5 range, so $5.80, $5.90 kind of area. And then I have since reopened positions at lower prices at around $5.25. So we have made some reasonable profit on here, but it just kind of looks bad in the books for now, I guess. With Bitcoin, 2 trades were closed at a major loss, so we had a minus 64.5% and a minus 27.8%. Both of these were basically closed as damage control following our sharp pull away from that long-term downtrend. So this was prior to the breakout. I was very, very cautious about it. I looked at what's going on and where the price is, and I'm looking at the charts, and the charts are telling me that we're very likely to go under 6,000. Of course, since then we've had this tether situation erupt, which has pushed the price back up. But effectively, these positions were both closed for damage control purposes. Taking a look at stocks, and again, closed a Microsoft position for minus 3%. I believe it was a stop loss, but I can't remember exactly off the top of my head. Again, basically, just trying to avoid things getting worse. So this is after the market had really started to turn downwards again. Twitter, 1 trade closed at minus 23%. Twitter dropped less than quite a few other stocks. So I kind of felt like I wanted to take it out just in case this move continued and Twitter was just a bit slow at kind of catching up. I also feel like I've been slightly overexposed to Twitter. I was kind of happy to wait for it to turn around for the time being, but since the market turned bearish, I'm not so confident in doing that anymore. Intel, 1 short position for 2.7% profit. I actually failed to do a short on Intel last week due to some of the problems with their supply chain, and they actually announced that they had fixed those problems. So I ended up losing money on that trade. I tried it again because we're in a slightly more bearish market, and Intel was something that I felt more comfortable to short, and we turned a small profit of 2.7%. Etsy is a stock that I have been bullish on for a while. I still think they're going to have a really smashing earnings report this quarter. So looking forward to that in a few weeks' time. But I did close two positions at minus 39% and minus 41%. These were basically done to free up some money for me to short the market. So that short on Intel, the short on Snapchat, and the NASDAQ trades were all effectively funded by me closing these positions to make some extra funds available. It's pretty regrettable, and I'm kind of upset that I had to do that. I bought back into this dip when it was nowhere near low enough, and effectively used up most of my funds. So I was forced into a position where I would have to close something out to free up some funds again, and Etsy is what I chose to do that with. The good news, of course, is that the NASDAQ 100 positions, 5 shorts, those actually are what was funded by me closing those Etsy positions. And as you can see, with the exception of the one loss of 1.6%, they were all basically profitable. One of them was a break even. So, not too bad. Basically just day trading very, very cautiously on the NASDAQ 100 with 2 times leverage. That leads us to Square. So Square is by far the most painful for me to talk about. I'm pretty upset with how these trades ended up. Looking at them here on the screen. So I'll start with the good one. There was one trade that I closed for 1.7% profit. Honestly, it was basically just kind of catching the rebound, if I remember correctly. Unfortunately, 4 trades were closed at very substantial losses of around 50%. I believe all 4 of these were 2 times leverage positions that I'd opened maybe 2 or 3 weeks ago, and were unfortunately kind of forced into this position where I didn't have enough equity to lower the stop losses, and I was trying to juggle the stop losses to stop them from hitting. But as you can see, they effectively hit, and some of them actually hit lower than 50% as well. So they're 52.3%, for example. So that's pretty frustrating because obviously it hasn't really gone lower than those prices. It's sold more or less on the bottom as well. I did rebuy some of the positions pretty much as soon as this happened with the funds that were available because I want to recoup those losses, and I'm pretty confident that Square will recover. But Square was by far one of the worst hit by this correction in the market. I believe it dropped by about 15% or so. And since I had 2 times leverage positions, that's a 30% drop in, the space of a few days. So that really, really, really wasn't enjoyable at all. I feel pretty guilty about those positions. It wasn't good trading, I guess. I should have had more money to one side, but unfortunately I didn't. So there's I've kind of written an explanation about that a bit more in the written version of this update if you want to read on about that further. AMD, another quick trade here for around 1% profit. Really not not much of a consolation given the trades from this week. Actually, in hindsight, I look at it and I kind of wish that I had held on to that a bit longer because it rebounded to a pretty high price. Actually, AMD, it was quite resilient during the drop. I really thought that AMD would drop down to like $24 or so, which was my initial shorting target for AMD prior to all of this happening. But it seemed to hold strong around $26. So. And then rebounded up to $27.50. So AMD is looking pretty strong, and it makes me more confident looking ahead past this towards the earnings that are approaching. Finally, we have Snapchat. So I shorted Snapchat for a 1% profit. This company is something that I'm actually becoming more and more cautious about shorting, just because I think the actual chances of this getting to real difficulties and then being purchased by another company is increasing in its odds effectively. So I think that Snapchat as an application is still a good and kind of useful application. I think as a company it's not really sustainable, but it wouldn't surprise me to see someone like Google or Amazon perhaps pick this up because they're really kind of lacking in that good communications department in terms of like an application to compete with something like Messenger. So I'm a little bit concerned that those companies may swoop in soon and just pick this up as a nice cheap bargain because the market cap is down to somewhere like, I think it was 6 billion or something last time I checked. I need to double check that, so don't hold me to that. I'm kind of just pulling that number out of the air. But yeah, I think it's becoming a risky short, even though it's dropped so low and we've had some great profits from it. I'm very cautious about shorting this any further, really. So if we head on to performance, you can pretty much see when this disaster hit. Week 40 was obviously very bad, which was last week. Week 41 was even worse. So 9.25% loss on the portfolio. The portfolio changed by minus 9.25%, and 3.72% of that is realized now as well. So really, really not good stuff. Whereas in week 40, I actually managed to keep my realized trades in the green. Week 41, I did not do that at all, primarily because of those square positions. So yeah, it's really not good news, and I don't think it's very likely that I'm going to return to profit this month, unless cryptocurrencies turn around, which is possible. So it is possible that we could turn this around and have a green month again, like we did in July and August. But I think it's looking less likely at the moment. So not great news. Not what you guys want to hear, but that's the facts, I guess. So looking ahead, a couple of things I want to talk about quickly. So first of all, earnings pretty much get started this week. So tomorrow is the first day that I'm really looking at any. IBM will be a good one to kind of indicate roughly the kind of direction that we're likely to see some of these earnings reports take. And we also have Netflix tomorrow as well, which obviously we have a pretty sizable position in, not one of our biggest positions, but certainly not the smallest. I'm reasonably confident about them. I think they've been releasing some very, very, very good content recently, and just kind of keeping their user base locked in while they continue to grow, and especially focusing on new regions as well. So I'm pretty excited to see which regions they've been growing in. I feel like they're going to possibly point towards Scandinavia as a big growth region, but that's more of a hunch than really based on anything too much. They've made a few different programs that have been based over there. So yeah, I'm pretty excited and pretty optimistic about Netflix. I don't think it'll be some sort of crazy breakout quarter, but I do think that it should be a nice, consistent, good performance from them. I am also going to be heading to London tomorrow to take part in a panel discussing investing. This is run by Finamize, which is actually a pretty cool startup. I didn't really know too much about them until a few weeks ago when I started using them. But basically, they send out like a really small, concise email every week that just kind of talks about anything financial and summarizes it for you in a really, really short email. So it's like a 2-minute read, which is great for me because I'm very slow at reading and I don't really enjoy reading, as probably my housemate could attest to. But yeah, so I'll be at that event. I believe they've got a really, really big waiting list, so I'm not going to recommend that any of you guys come to find me. But I think we are planning to go to a pub afterwards. So maybe if you're really, really desperate to come and say hello, then it's in Shoreditch somewhere, and I'll probably try and tweet out where it is or something at the time. If not, I'm sorry. Don't be like watching my Twitter thinking I'm definitely going to do this, because I might not. So that's all from me for this week. I'm really sorry to be having to deliver such terrible results. Yeah, I mean, there's really not very much I can say to comfort you guys at this point. I know a lot of people hit stop losses. Hopefully we can recover from this. I have been working on adjusting my trading style a bit, but we'll have to wait and see. That's going to take a bit of time for me to kind of put into action and tweak and make sure that it's feeling right, basically. But that's it for me. Thanks for watching, and I'll see you guys next time.